Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to look at portfolios and what the mindset is between trading portfolios and long-term investing portfolios. I'll also be looking at why being a flip-flop, i.e. changing your opinion, changing your direction, changing your mind, is very, very good for profits. And finally, I'll have a look at the 60-day cycle, exactly where we are in this framework that we've been operating on for the last few months. So if that sounds interesting, then you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. Please do your due diligence and make your wider research before you actually make any investment decisions. So with that out of the way, I'm going to start off with a life-changing quote. So this is not just applicable and relevant and important to investing, but it's actually extremely important for those people who wish to learn and improve and progress in their own life as well. And this quote says, quite simply, a wise man changes his mind sometimes, but a fool never. To change your mind is the best evidence that you actually have one. So what does this mean? For me, in my life, giving myself the right to change my direction in life, giving myself the right to change my opinion, giving myself the right to walk away, giving myself the right to change my mind has really been life-changing at those junctures where I've actually ended up having to do that. And the reason for that is that life is a changing thing. Every day brings new information, new experiences, etc., etc. And if those new changes, new experiences, new interactions are such that they make you want to reformulate your previous thinking, your previous opinion, your previous mindset. If it does do that, then you would be a fool not to take that new information into account. There are no rewards in being stubborn. There are no rewards in digging your heel in, especially when the evidence is to the contrary. And that also now applies in investing. So I'm going to show you a chart which proves this point a little bit in terms of trading, because a lot of traders make a very big mistake sometimes, especially when they see the market move against the narrative, the thesis that they've developed, which has helped them to make a decision, i.e. they've gone into a trade with a certain narrative, and because no one knows the next candle on the 5-minute, the 15-minute, the 1 hour, the 4 hour, the daily, we don't know what that candle's going to be because we don't know how people are going to behave out there. So when the candlesticks develop in such a way that tell you different information to your thesis, to your narrative, then you would be wise to take that into account. And if it's powerful enough, then you should change your previous opinion, your previous thought process. So this is the example I'm going to give you. This is on the weekly chart. So these 3 candles are what we call 3 white soldiers. And if you have a look at what do the 3 white soldiers mean, it's quite clear that the 3 white soldiers is a bullish candlestick pattern that is used to predict the reversal of the current downtrend in a pricing chart. And the pattern consists of 3 consecutive long-bodied candlesticks that open within the previous candle's real body and a close that exceeds the previous candle's high. So the 3 white soldiers, usually you find at the bottom of a trend, 3 big-bodied candles here. And as you can see, the 3 white soldiers played out because the next 2 candles were green. So if you got in at the close of the 3rd candle at around about 43.8, that would have got you at least to the next stage, which is around about 49,000. And if you'd put the stop losses in, you might have got up to about this candle here and closed out at around about 48, having got in at 43 here. So you had a $5,000 run just because of this pattern that was developing over here. So this thesis, this narrative of the 3 white soldiers candlestick pattern played out handsomely over here. But if you look to the right here, you can see another same pattern developing over here. So we had a pullback, so the trend was down, and in that trend, the reversal of the 3 white soldiers was the same narrative as it was over here. However, the outcome was completely different. So here you got a gravestone doji that followed the 3 white soldiers. So in this case, that would alert you that this pattern may not now play out. So you would have to get a confirmation after this. The best way to do it, in my experience, is to put a ray at the top and at the bottom of that doji candle. If it breaks and closes below it, you need to get out, which is what happened over here. If it had actually broken above and closed above, then you knew that this 3 white soldiers was going to end up as a continuation pattern, and that this candle here was a fake candle and would invalidate its prominence. So therefore, when this closed over here, this would have allowed you to get out at a minimal loss, having got in at the top of this candle at 61. Because what this candle did was conduct the candles afterwards, which led to, and this was the clue in what was going to happen, to all this happening down here. So this candle here was really the start of the end of this bull market over here. So the point I'm trying to make is that when the thesis, when the narrative doesn't work out, and that the candle here should have been green but it wasn't, then you need to just change your mind, change your opinion, change your direction, change your mindset. But what people do, and you'd think, well, why would they do that? But they do. The majority actually lose money here. They think that getting on board at this point and seeing this, they're expecting another green candle up here. But the reality is that the thesis and the narrative that you've got over here has already been invalidated really by this candle over here. So always give yourself the right to change your opinion, change your mindset, change your direction. Otherwise, it could end up costing you in more ways than just the money side of things. So here we are at this juncture. We're at around about 23,200 now, having been as high as 23,900, and it looks with all degree of probability that we're going to hit the 25.2, and we'll have to have a look at what the price action does there. But you can see quite clearly, if you put the 200 simple moving average on the weekly chart, there's a lot of confluence of resistance at this point, which is currently at around about 24,800 now here. The Bollinger Bands, if you put them on, you can see that they're coming up to around about the same levels over here. And of course, you've got this strong resistance at that 25.2. So there's a lot of resistance, a lot of obstacles here to get past. So I would suggest, on a balance of probabilities, that we're going to have some sort of a correction over here. And that brings me very nicely to trading portfolios and investing portfolios. I can only tell you what I do, and I have 2 portfolios. I have one which is a long-term investing portfolio where I've been in all my positions, and if you've been watching my videos, you'll know that I was accumulating here at the 17,000. I said about 75% of my funds were already accumulated over here, and then when this came down, I started to put the other 25% over here. So I dollar cost average down here in between these two. And those are the investment positions I've been carrying all the way up here so far. So obviously they're in a very good, healthy, profitable positions. But I also have a trading portfolio where I'm trading some of these movements. In my trading portfolio, I took some profits here, but I don't trade in Bitcoin. I trade in the Bitcoin miners, which I think are much more volatile and better for the trading portfolio. So when Bitcoin came over here, I took some profits in my Bitcoin miners portfolio, and when there was a pullback in those, I went back into them again. And I did a similar thing over here at the 22,800 level. And I'm planning on taking some more profits when Bitcoin hits the 25,200. Then I'll be looking at the Bitcoin miners portfolio, and the ones that I'll be trading, I'll be looking at their candlestick patterns and their resistant points, etc., and taking profits there with a view for a pullback. Whether that comes or not, we don't know. Nobody knows. But in my investment portfolio, I'm not touching that, even if this comes back down here, because at the end of the day, nobody knows what pullback we're going to have, whether it's going to be back to this level, or down here at 18.3. And who knows, it might go all the way through, and I've seen this many times before. Instead of having a pullback at an expected level, it just goes barging through. So you don't really want to be left being exposed to that kind of vulnerability. So when I say that, oh, it's coming to a level here and there's a good time to take profits, I'm obviously suggesting taking profits in your trading portfolio at that point. But most of my videos are really talking about the long-term investments, that once you've actually put your positions in here, then That doesn't mean you're going to hold it for 3 years without any trading opportunities along the way. Of course, you'll get good opportunities, but my first main opportunity really here would be, because we had the top at 69,000 and the bottom here so far anyway at 15,400, if you do a Fibonacci retracement, you can see that the 61.8 is going to come to around about the 39,40,000 in this region here. So if we put a marker there, so with a high degree of probability, I would say that that would be an amazing opportunity to take some profits, by which time you'll have built up a lot of funds in your long-term investment portfolio. And so whatever you feel comfortable, and I can only talk about myself, I would be planning on maybe 25%. I would take off the table. But if the market goes all the way through, which is a possibility, then I've still got 75% riding to the top. And if it does have a correction, then I've got 25% waiting to take advantage of a pullback over here. So it's just some strategic levels that I would actually be looking at to add to my long-term investing portfolio. So if you have a question that why do you use the 61.8 as your levels to start off with? Well, if you look through history, and I've shown you this many times in the past, that in the first and the second cycle, the price came up to between the 61.8 and the 78.6 in the first year after the end of the bear market in those cycles. So it seems a good place to start that at the end of this cycle here, those would be the levels that we would be able to come up to. And only time will tell. We'll have to wait and see. So as you can see, the mindset of a trader is far, far different to that of an investor. Okay, a quick look at the 60-day cycle. We're actually currently on day 31 with this red candle, which has brought the price down from 23,900 down to the current 23,100 as I'm making this video. But what we have got is that on the 30th day yesterday, we actually went higher than the previous high within the first 30 days of this new cycle. So what we've now got is a right translated cycle. And usually a right translated cycle after a long bear market here would be another sign that we've now bottomed out at the previous low of 15.4, and that we're going to probably make a higher high over here to these points. So somewhere along the line, we're going to make a higher high before we go into the next cycle, which starts over here around the end of February. So we're now in the last 30 days. We'll see how that pans out. So the previous cycle, we made a high before the 30-day. And then when we got past the 30 days, we made another high over here, which meant that that was a right translated cycle. And that was a really good clue that this market having a change of direction over here. And I mentioned all those little points as we were going past those 30-day price actions here. So what we can expect now with a higher degree of probability, so we can see we made a flag over here with some consolidation, creating this bull flag. It's broken out to the upside, another bull flag, and that seems to be breaking up to the upside over here. So the next logical place would be this $25,000 mark here. 25, maybe 25.5 it might get up to here. And then it has to make up its mind. But with the confluence of the 200 simple moving average and this resistance point and the Bollinger Bands tells us that there's a lot of resistance to get through over here. And it seems logical to have some sort of a correction. What correction that could be, no one knows. At the moment, the market seems to be getting rejected at the 23,900 level. Let's see what happens in the next few days. But certainly, the trajectory is still to the upside. And if you have a look at the 8 EMA, you can see that it's been riding the 8 EMA all the way up here and using it as a base to bounce from. So we're just coming back down to that level now at around about 22.9. So the chances are, if we do get to the 22,900, we'll have another bounce over here possibly. But if we break this, then the next level would be this 21 EMA, and that's at 21.6. Let's see how that develops. And if you've been following me on the Twitter, you'll know that I've been posting quite a lot of those candlestick patterns here. These were the two outside bar candles where I said quite clearly here that those two outside bar candles were part of a continuation pattern over here. And the chances are that these two will lead to a big move over here as a continuation from the price action over here. And this is exactly what's happened over here now. It's played out. So these are some of the charts that I do post on there. If you want to have a look at those, and if you want to follow me on Twitter, then all you have to do is to click on the link below every one of my videos, and then you'll get my Twitter link there. Finally, a look at the Bitcoin miners portfolio, which we started on the 5th of January. We've got a target of $1 million with a starting capital of $100,000. And these are the 8 mining companies that I chose. And as I mentioned at the beginning, that Cypher Mining and the Marathon are the 2 that I would expect to be the fastest horses. And my favorite of the 2 is Cypher Mining. So look out for Cypher Mining in 2023. Certainly at the moment, it's now taken the lead from the Friday close, the Friday 26th close. That's now up at 126%. Marathon is still 90% up. And there are other ones that are over 100% up. That's Hut 8 and Bitfarms. So overall, the average increase is 86% since the 5th of January. And we're currently on our portfolio 186,300 up. And this portfolio is a long-term portfolio. So I won't be trading with this portfolio unless I get to a point where I think that it would be safe and prudent to take actually some profits and then wait for the pullback. And I'll let you know when that happens. So until then, this is just going to be something I'm going to just ride all the way through, possibly up to where the Bitcoin gets to about 40,000. Okay, so I'm going to leave it there. I hope you found some value in the video. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, it would be interesting to get your views on the Bitcoin miners. I don't think anybody's really commented on the Bitcoin miners portfolio. And it would be interesting to see what your take is on that portfolio that we've created here. So until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.